Hey guys, Broker Brett here with Andrew Carroll of the Insurance Requirements podcast and Dave Perez of Lumen Insurance. Just hanging out with these guys over the past month has already flipped my perspective on insurance startups. How are you guys doing today?
Doing excellent here in Austin.
Yeah, no complaints here.
The new SF, everyone's migrating over there. It costs $14,000 to send a U-Haul that way and $300 to go back the opposite direction.
That's
very
amazing.
true.
Yeah. No, they're killing it. Even I don't know if Joe Rogan ended up in Austin. I know you guys already have Tim Ferriss over there.
He did.
Yeah, I think Joe's on the way if he hadn't got here already.
Dude, he's got a sweet new alien-looking podcast studio set up out there already.
Nice.
Which apparently he wants to host a presidential debate, but I feel like I'm steering down a direction we shouldn't go. I feel like we should come back to insuring startups. So
we don't have enough time for that.
600 pages later. For me, I love working with startups. I've helped a few startups. I'm advising a couple, and I never put this thought to form until talking with you guys and hearing your podcast that you did together. And yeah, Andrew Carroll's Insurance Requirements podcast is rad. A couple episodes out and just really highlighting, properly setting up startups with insurance. I think it's really cool. Andrew, thanks for putting that together. So we're used to insuring assets and liabilities. I think of Bob, I think water backup, I think hired and unknown auto. These are just table stakes. If you don't want a policy with that, not totally interested in selling the policy. I've had to flip that with startups because they're like, hey man, I just have this laptop and I'm not going anywhere. I just need some tech, and cyber. And I realized these guys are starting digitally native and it may grow into a tangible risk, but they're not overly concerned about a slip and fall, while they're working off a kitchen table. So David, how long did it take you to kind of realize it's a little bit different insuring a startup than traditional business, or is that a light bulb that turned on, kind of right away for you?
Well, I think early on in my career, I was really curious about working with tech companies. And one of the things that
I'm new to the business. I just wanted to ask you, what are your thoughts on insurance? And he's like, don't need it. And I was like, well, tell me more about that. He's like, well, you tell me why I need it. And I'm talking about brand new. I was like, yeah, well, what if lightning hits your building and blah, blah, blah. He's like, everything's in the cloud. Don't need it. And he's like, I got a greater chance of failing as a business than I do like somebody stealing my stuff. At the time, servers weren't in buildings anymore. They're more cloud-based. And so he's like, my greatest risks are not with insuring tangible property or things like that. It's more E&O, cyber, things like that. And so that's what really flipped me was, if somebody steals some laptops, they replaceable. And they're more interested in as they get bigger, they're going to need this to get in their space, and they'll need it later on down the road. I'm not completely dismissing, but we're talking to a very risky pool of people. By the definition of them being entrepreneurs, founders, co-founders, they have gone out knowing that there are inherent risks, and they're willing to bet on themselves, which can be a risky endeavor. And they know the odds, and they're doing it anyway. So we're talking to a very risk-tolerant group of people.
That's interesting. I didn't even think about that. And then, Andrew, how did you migrate over to like the cyber and the tech side of the business, for your kind of bread and butter of interest?
Yeah, so I've been a commercial insurance underwriter now for going on 8 years, and I've always been in the technology space, specifically small commercial. And so when I first started out, I knew roughly what business insurance was. I didn't even know there was a whole technology space for it, which was really exciting to me because, during college and high school and whatnot, I did a lot of computer maintenance, break fix type stuff. So when I found out that I could kind of do that with insurance, I jumped at the chance. But yeah, today's point, the vast majority of technology companies, their software or products generally aren't going to hurt people. They're not going to cause damage to tangible property, but they really have a big exposure to economic loss or causing financial damage to their customers or cyber liability. And so, in my estimation, that's their largest risk. So it just was something that I gravitated toward.
Yeah, it is funny, and I'm going to sound like a cranky agent right now, but it's funny when they do actually need the policy to get into the space, and they're like, "We needed that yesterday." Luckily those are easier to write, but when it's required, they usually ask for it. People don't
Yeah.
get too proactive ahead of time. An interesting one you guys might well speak to: directors and officers too. Once people start taking monies or key man, always seem really relevant. Even kind of early on, as people are dumping millions of dollars into, a startup.
I agree 100%. And that's, we ran some analytics on the book, and 54% of the time, D&O is the leading policy that we're writing. And that's by virtue of us working with, our target market is institutional VC backed companies. And so usually in those term sheets, they're asking for D&O within 30 days of the close and key man life on either the CEO or CTO or two co-founders or one or the other. If they don't ask for it, what I've learned is they're completely replaceable. So
yeah. Oh wow, interesting.
Can be a bad thing. I mean, that's why they're putting them in place. Is if you get hit by a bus or you get COVID and die, something like that, we're going to have to replace you. And so kind of an interesting deal. If somebody doesn't ask you for key man, you might want to start asking yourself if
like, hey, what about me?
Yeah.
What about me? I'm here.
Yeah. So key man's kind of cool. It's money's for the business, heaven forbid if something happens to the founder, because it's going to, or a key employee, because it's going to take a minute to get back up to speed.
Right.
Yeah.
Right. And it can, it can affect whether people do business with that company or not. And so a lot of times those early founders are their primary revenue generating individuals. And so there's so much more that a founding member will do than just, a key employee who's your top salesperson. And if they get hit by a bus, how are you going to replace them? It's going to take some time, things like that. So, we see that in traditional businesses, but in the tech world, I think it's even more apparent when they're wearing so many hats and the expectations of growth are so high that if they do have a situation where they die, it's hard to replace them.
Oh, 100%. Usually there's a little bit of an X factor. You wouldn't become a CEO or a founder if there wasn't some of that secret sauce,
Right. Yeah.
And then Andrew, how often do people want kind of stripped down price competitive tech, and cyber? How often do people worry about the fringe cases, and do people really care if it's robust and can handle third-party issues, whatever else?
Yeah, I would say it comes down to the company itself, right? And what their thoughts on risk management are. Generally, people who have a more risk management steering focus will want to see the value of the coverage and aren't so price driven. But there's also companies that are looking to just get something to satisfy your contract and aren't necessarily as concerned with the coverage and are more price driven. But yeah, it depends. But there's all sorts of companies out there who view their risk in different ways, right? So companies who feel that they may not have the riskiest business or their service offering is not going to, cause any damage. They probably don't see the need for a terribly robust, coverage offering, but there are certainly ones out there that do.
Yeah, and probably the agent too, how the agent propositions things. If they're, selling on price, if they're selling on, consultation, and like you said, reading the room, a little bit on that. And then, as startups mature, every state's a little bit different, but workers' comp, once you hire your employees, I think people get scared off of benefits a little bit too long sometimes because you're using pre-tax monies. It can be a great write-off, for a company and retention tool. Just trying to think as like the companies progress. EPLI is another one as you really start hiring and building out, employee practices and liabilities. I see Dave kind of perking up over there on EPLI, definitely.
Oh man. So I won't say which client it is, but there's actually multiple ones that I've talked to in the last few weeks who are very concerned about EPLI, asking lots of questions. And it's usually around a risk, hey, we're letting go our founding one of our founding members, the CTO, they have agreed to a severance package, but then they never signed it, and they've been ghosting us since then. Like
employment practices and liabilities insurance, in case people feel mishandled, in case people want to sue the company, say they're let go unfairly, something
right,
like that.
right. Yeah, I mean, we're seeing all kinds of stuff going right now, even with hey, you're making me come back to the office now. So that is a hostile workplace, or you're going to fire me because I didn't come back to the office, or whatever the situation is. We're seeing rates ticking up. In your state, Brett, a lot of the carriers aren't writing new business for employment practices liability
What do you
insurance
mean?
right now.
Our state's not litigious. There's nobody sues anybody in California.
That's a myth. That's
Yeah. Yeah. It was just a rumor, I guess.
Yeah. I guess.
Yeah, and then the things going on with diversity
Mm-hmm.
and things like that right now. I mean, there's so many issues in the business world right now. It's just a really, really tough time for companies, and we're specifically talking about tech companies in today's episode. But lots of risks, lots of mass firings, lots of individual firings, and then you've got all these other issues that are going on that can make conversations uncomfortable, can make you mentioned D&O earlier. There were 4 lawsuits that have dropped on very large companies like Gap, and I think Facebook's another one, where they didn't have enough board diversity, specifically from the Black community, and so they sued them. They said there's no diversity on your board. It's a lawsuit. That's a D&O claim right there. And so we're seeing that as well.
Oh, totally. And a lot of people look at even like your standard auto policy, and then you put an umbrella on top of it. They're like, why do I need $1 million in coverage? Why does this D&O need to cover $2 million? They forget about lawsuits, and like all those legal fees kind of end up winding back into our insurance costs, and so that's kind of, we look at just replacing things, but it's more than that, unfortunately, we have to cover.
Mm-hmm.
And then once they get really robust and start getting built out, I think there's 2 different lanes on this, but excess liability and like a commercial umbrella too. Once you have the table set across the board, can have an extra $1 million, $2 million, $2 million, $4 million, just to cover you and make sure no matter what happens, you got extra firepower.
Right. We call them insurance inflection points. And I think, the way that you're kind of going through each policy, there's certain triggers for those. And, we've blogged about this and talked about it and things like that as well. But, company formation is kind of our first trigger. And, there's no one way to do this, but if you have somebody who's a serial entrepreneur, somebody who's very wealthy, who's, kind of had some exits and things like that, has assets, they've got the biggest target on their back. And so in order to even be an advisor on the board, even if there's no revenue yet, they're the ones that are driving that request to get D&O. The serial entrepreneurs typically pop in and they're like, we just started, we're in stealth mode. Don't tell anyone, we need D&O. And they haven't even raised $1 yet. So funding isn't always the main reason why people are getting D&O. People who've been through some issues in the past know that that's probably the first thing that they should get. I had an entrepreneur the other day say, I went through this issue with some prior co-founders, and I will never go without D&O ever again in any of my companies that I'm ever a part of. And they're like, the lawsuits lasted for 3 years. Basically everything that we made as, founding, our co-founders, the founding team, has been sent back to legal fees. So, the D&O part can come at different stages, but I would say that's kind of the first evolution of the company. And then it's the early stage of, how do we get traction? How do we get our first clients? How do we go from beta to a paying customer? And a lot of people say, well, we're not getting any revenue, so we don't really need E&O and cyber. Andrew, what would you say to that?
Yeah, I mean, it's having revenue definitely increases the exposure. But yeah, I mean, a cyber claim can happen the first contract you sign, or even before then,
I was
right?
gonna say the
If
tail
you,
of the risk too. Yeah.
yeah, I mean, if you've got people interacting with your product or service, even if without revenue, you've got an exposure.
That's right.
It's lower, but it's still there.
Yeah.
I would say the scariest part of cyber too is the exposure could have been 3 years ago, could have been a year ago. You don't know what's leaked out of the system, who's walked off with what, who stored what as they were getting fired. You just don't know. So it's so nice to have that blanket.
Yeah, I mean, depending on what kind of IT security controls you have in place that are monitoring those things, it kind of works in parallel, right? If you've got kind of lax controls, that tail or the opportunity of time that a claim could occur gets longer. But if you look at IT security like you would just building your team right from day one and scaling that and putting in thoughtful measures, you can reduce your exposure a lot. But it's still there. It's still possible. And like you said, the people aspect of it, you can have the most robust security system imaginable, but you have one person click one link and they're in.
Run your phishing tests. Yeah, test your own employees. Then Andrew, what would you say to people who are like, everything's on Google servers, everything's on Amazon servers, we don't need this, those guys are fine, they're not getting broke into? What would be your response there?
I mean, it's definitely a selling point, right? Because you're right. I mean, Google and Microsoft and Amazon are definitely very, very secure. But a lot of the time, if you dig into the contracts and the service agreements, they're not providing security services, and a lot of securing those cloud instances falls on the customer. But then you got to also, speaking of contracts, if something were to go wrong and you had a breach or something like that, Amazon and Google are not defending you. They're not making you whole, right? So
they're our best friends. They bring me stuff all the time. They tell me where to find things on the internet.
They do. But when the bill arrives, they're not going to be there to help you. So having that kind of exposure insured goes a long way, because you can't count on your vendors, right? Even if the contract says that maybe they would provide some sort of defense or indemnification to make you whole, you got to look at how many customers they have. If they have a something approaching a class action event where one event is going to impact multiple customers, do you think they have a large enough insurance policy to make everybody whole? The answer to that is probably no. And so taking control of your risk at the business level is probably the best thing you can do.
As I said, Dave, it seemed like you might have had a point or two on that as well. When the client's like, we don't need tech and cyber, we're fine. Everything's in the cloud that's protected.
We don't get that as much because a lot of the people that we're working with kind of understand how that works. But I can definitely see the mind and the wheels turning. They're like, yeah, but aren't they going to cover that? If they go down, won't we be covered under their policy?
Or the other argument, if they go down, we're all going down.
If they go down, the world is shutting down. Like billions of dollars are going to be lost. So, which here we are in COVID with billions of dollars being lost. But no, I would say that we get that question more on like, when we ask about credit card payments, PCI compliance, things like that. And they're like, no, we don't store any credit card information. We use Stripe, which is great. That is a good case where you are not storing that data, which means you're not storing those credit cards for, under your systems. That's on Stripe. So that makes sense to follow that logic. But if there's a compromise, just because they're looking for the credit card information on the black market, I don't know how much a credit card is worth, but $1 or something like that. They get all these credit card numbers and credit card information. They're still looking for other things that maybe won't change, like names, email addresses, financial information, all the questions that Andrew might ask on an app. What information do you have? And the thing that I always remind our clients is that, well, you got 25, 50 employees, you at least have 50 social security numbers because you got to run payroll, and you got some bank account number. I mean, you still got your stuff from a first party.
Yeah.
So keep that in mind, as you're looking out at these policies. And a lot of them, they get it. A lot of them are very tech savvy. They're gunning for like, SOC 2 compliance and trying to get all these, trying to get these, stamps of approval to show their clients that they're being very protective with their data, and they know how valuable that is. They also know how valuable the trust is when you do give somebody your data and then it gets compromised. I mean, there's just kind of a significant lack of trust that could occur if you don't handle it right.
Right.
And I may be showing some ignorance here, but if there's actual records in the office, if somebody writes down a credit card number, if something physically gets taken too, sometimes there's some overlap of data getting out, even if it's not necessarily on a computer. That's another kind of tale of risk that's covered by, a lot of these policies, I believe. So.
Yeah, I think Bill Clinton said it depends on what your definition of is.
Yeah.
So, what is data? And what's your duty to protect that data? And so a lot of times, and Andrew, you probably be better suited to answer this question as an underwriter, but you have to go back to the definition of what is the definition of data, and does it have to be digital?
Yeah, no, I mean, it goes back to reading your policy, right? What are the declarations state? How does it define data, personal information, et cetera? And a lot of the times, policies with more robust coverage will cover not only electronic records, but physical records. So that would, touch on anything written down, whether it's just in a note-taking fashion, or in, a physical file, right? Those are kind of on a downward path as far as being kept, but they're not totally extinct. Any kind of record like that's going to be written down or just trusted to the business, right? If you take that information in any form or fashion, you're being trusted. You have a higher level of care that's implied there. And so, making sure that they're kind of covered, however your operations are set up is pretty important.
Absolutely. Yeah, and I appreciate you guys coming on. I'll definitely link to Lumen Insurance and then Andrew's, Insurance Requirements podcast. But these guys are experts in their field. Learned a ton just from talking to David real briefly, even about tech startups out of Austin. So definitely reach out. The new San Francisco is coming, so the transition is upon us. But thank you guys for taking the time today. I think a lot of good information here to share with the insurance nerds community. We'll catch you again.
Yes, indeed. Thanks, Brett.
Thanks, guys.
All right, thanks, Brett. Take care.
Cool.